Good day to everyone, and we're beginning this short video which is gonna be a kind of info video for all the guys on Duxcopy trading, and it's gonna be about oil price. We cover each week the Energy Information Administration of the US crude oil inventories, during which they release how the information how oil inventories basically in the US private firms warehouses have changed, and it impacts the oil prices immediately by a percent or 2%. There's always the background of the OPEC that I talk about, the chart, what is occurring, and it's kind of the thing is that a simple forex trader usually doesn't know all this stuff. So this video is going to be an info video of the basics. So let's start. First things that you need to know is that you got this simple equation of demand and supply on oil, and it's simple. You take a look at list of countries by oil production and you know who are the big players. United States, 11 billion of barrels per day. Yeah, billion of barrels per day. Seriously, BBL. I think barrels of fluid or something. So this is the production per day of United States, Russia, Saudi Arabia, etc. Those are barrels. Yeah, I assume those are barrels. So those are million barrels each day. So you got this whole supply and all of the countries producing. By the way, the smallest one is Slovenia with 5 barrels. Good for you guys. So you got all these producers and you got this supply. And you can see, for example, chart values even here on Wiki that we are sitting and hanging around oil production in millions of barrels, etc. and all that. And it's simple. There's a set market price for oil that the developed world needs. It needs oil, it's willing to buy something, and that's the market price for it. Like any other commodity, just how the world wants it, etc. If the supply goes down, meaning there's less oil, the price goes up. If there is more oil, the price goes down, meaning, okay, less oil, price up, more oil, price down. Simple. If you walk into a shop and there's more bread, it's gonna be cheaper. If there's less bread, etc., it's gonna go the other way. So the thing is, those basics are the ones you need to take a look at. So if suddenly, for example, the United States decides, okay, we're not making any oil, the government issues a ban on oil production, the total world production is gonna actually drop, as you can see here, by 1/8, and that's gonna get the price immediately. And of course, then the United States is going to start producing and the price is going to go immediately down. So that's the equilibrium there. So you can check out all this stuff in detail, and basically is that oil analysts, they just watch the info that is in public and try to dig up and forecast how is that production going to go and what's going to be happening with it. That's one of their jobs. The second job is to know what are these countries doing. And so let's go through let's go to the top. And what we have there is United States, Russia, Saudi Arabia, Iraq, Iran. We can go to the top 5 because they are associations in general, all these that you can see here in OPEC. They are the ones significant enough to influence the oil prices globally. See, you got the cartel. What's a cartel? It's something that's forbidden in any country. It's a union of producers of some sort of service or a product which are fixing prices and influencing prices. Basically, it's dumping, overproducing, anything that you can imagine. If you pick up a book and you kind of even just Google malpractices in the market by a cartel, everything and all that is a criminal offense, even in most countries, but for private firms, but they are doing that in the country level. In country level, it's all allowed. So we got OPEC. You can read all the cool explanations and all that, but that doesn't matter. It's not going to help you as a trader. So I'll explain it to you in the simple terms. If these guys don't like the oil price, they kind of stop producing it, and oil price goes up because they have started producing less. And since 2016 they have been working actually together with Russia. They call Russia to their meetings, and during the last meetings they actually called the United States over. And so to get this illustrate this right, I'm just gonna pop a chart. I don't need anything specific, I'll just get simple any oil price. Let it load there in the background for me. So these guys are always talking about increasing their production, decreasing their production, and I can show you here, by the way, selected producers, this chart here that you can see on the right. See this drop here in the 80s. That was when the United States bribed Saudi Arabia to decrease their production. They were decreasing the production, so the prices started going haywire, and that actually, that whole moves around there, well, they caused even the fall of the Soviet Union. So this oil prices kind of has a big backstory. So at the moment what's happening is that it was revealed in 2016. So this is the light crude oil price, the daily one. You can see it was going pretty much down since 2013 because everyone was producing too much, and then it hit its bottom level here in of 25.18 per barrel, that's in US dollars, in February 2016. And then OPEC got together and realized that they have problems, because during that whole period of 2015, but when it was bouncing around the 50 levels, it was still okay, but at the end of 2015, when it was going below 50, it turned out that, for example, let's go back to it turned out that the United States production of oil cannot profit below if the price is below 50. Russia has issues with their government budget because a big part of their government budget is because of that. Saudi Arabia has such big problems and such dependency on oil that it was even speculated that they might go bankrupt. So they were thinking about selling their biggest oil producing company that they have, Saudi Aramco. Iraq, pumping as much as they want, and they have issues, yeah, with ISIS and all that, but that's kind of cleared up now. And Iran was sanctioned by the US not to produce, and so right now they are exporting, and they were hiding a lot of oil, by the way. Iran was the one which figured out a trick that you can hide off the books oil if you keep it on the tankers, not in storage. So they made a deal in 2016, and oil price went up. And steadily it was going up, and we had this initial surge that occurred here up because of their announcement. Then it was kind of eased, and in general the price was going up. And as they were making the oil cuts and they wanted to keep the price above 50, and they managed to do that. But right now there's an issue. See this sharp drop here of the oil price? That is the US allowing Iran to produce. Basically not produce, but to export. And you can see if Iran goes into with that production into the market, it beat the price downwards immediately down. And it stopped coincidentally just at the 50 mark, the one that in 2016 and 15 I was reading about causes problems to all the countries, and it stopped there. And we kind of know coincidentally that you can draw Fibonacci retracement levels on all prices, and you will see that you got them working. See that 50 levels near there are the Fibo. I think it was properly to actually do it like this, that high level. So Fibonacci retracement levels can be used on all. You can see that they work from time to time and cause pauses and such. So, but that's another story. Getting back to the fundamentals. So oil trading in general is knowing what these countries know and how big is that supply. And into the picture here comes in the Energy Information Administration of the United States. We got here this week, and on Wednesdays, usually Wednesdays and Thursdays, they publish their crude oil inventories. And the market usually makes a forecast by how many barrels, millions of barrels, has the supply in the United States changed. And as it changes, that announcement occurs, we have big bounces, immediate bounces by 1% in oil prices. And we've been taking advantage of them because there are ways how you can catch volatility, trade it up or down, doesn't even matter much. But if you're already doing something with the whole background and trading oil, then you can take advantage also of that. Okay, I got the last minute here. One more thing that I wanted to explain to you is the difference between liked CMD USD and Brent CMD. Somewhere it's WTI. In general, just Google crude oil benchmarks and you will find that for the benchmark, for the basis, you got a couple of various oil prices basic. You don't have the same quality oil everywhere. but the best one is the one with the least sulfur. You can see sweet oil, low sulfur. West Texas Intermediate is used primarily in the US because it's the best oil that the United States have. Then you got the Brent Blend, oil fields in the North Sea. I'll call it the British one. This is the region, by the way. You can see it's just the map of the Britain, but just shifted off to the right. But yeah, that oil mostly is also Norwegian. It's a complicated topic. But yeah, you got those benchmarks. You got Dubai, Oman, and Canadian crude. And in general, these benchmarks differ slightly, but not more than $1. The difference is in the transportation costs that you add. One of them might be more expensive, one might be cheaper because there's more being produced in that certain region. But so, if you want to kind of mess around with oil, remember you need to always read what's happening with OPEC, what are the energy ministers doing of those top 5 countries, what are they thinking, what's happening on the chart, what is the info from the United States, and that's how you trade oil basically. If you have any more questions, leave them in the comments. And that's that from me. I wanted to keep this short, below 10 minutes. I failed you. Sorry for that. And I'll see you during other webinars.